Hello and welcome to Currency Point, presented by me, Evan Lucas, for FP Markets. As always, please have a very good read through of the disclaimer on screen. Everything in this video is general in nature. None of it should be taken as any form of personal advice. FP Markets does not know your personal scenario nor your personal financial goals, and therefore none of it should be relied upon as any form of advice at all. It's just general in nature only. The US presidential election has probably played out as most of us expected. It is rocky, it is still ongoing, despite the fact that we are very much close to the idea that Vice President Joe Biden will become the 46th president of the US. We are going to go down legal battles, we are going to go down petitions, recounts, what's legal, what's not, and also about what happened on the day. We've been discussing this for several weeks now, that the expectations around the national poll versus what was happening in the purple states were two different things. And that played out, as we saw. Florida, as expected, also was a big mover of FX markets. And that, I think, is what's likely to actually possibly keep playing up over the next couple of weeks. I know we have a result to some extent, but it's clear from the Trump administration that they're going to challenge everything they can. We've still got to go, probably wait to even as late as the 12th of December, when it's finally forced upon the Trump administration to probably concede defeat. And again, that's still a long way away. And you've seen the volatility in it. What was also very astounding by last week's movements was what happened in the bookies, and they did, as we expected, move FX and move them strongly. If you wanted to look at this one, I'll just concentrate on Dixie only, and you can see incredible swings that happened on the day. It's leveled out, and we're now probably back following COVID issues, and probably, if you want to look at cable, leading into what's going on with Brexit on the 31st of December. But it just shows you how incredibly knife-edge issues can move markets and are likely to continue to do so. This isn't over by any means, and I also want to therefore point out the Senate is quite interesting, because some people are actually suggesting now that instead of the Senate being an obstructionist, it could put a happy medium in. We actually saw basically in the 24 hours after the election that Senator leader Mitch McConnell was very much of the idea that he wants to get the COVID bill through before Christmas, not what he was saying before the election. But there is genuine belief that the Republicans will probably put pressure and even block, water down, whatever it looks like, on some of the major reforms that the Biden-Harris ticket was running on, particularly things around antitrust and big tech. Also, you need to look at tax reform and the possibility of increasing taxes on some people. That also might get watered down. All those kind of things is why this idea of a happy medium has come. It may explain why we saw the best week on equity markets last week since April, when realistically the first wave started to die out. All of those factors are quite interesting things. It also shows that the market is very much of the belief that stimulus is coming. And what we probably got wrapped up in the US election, missed maybe, was that the Fed, although it didn't do anything last Thursday, it is very much readying itself to be there when needed. Rates clearly can't move any further, but they do have a huge capacity on their balance sheet to continue on with quantitative easing. And the US dollar probably reflected that, and real yields probably reflected that as well. And that's what's also going to drive markets going forward. And if you just boil that down to that simple idea, the medium to longer term view is that probably equities or anything with regards to wealth exposure is probably going to grow over the Biden presidency time, just because of the amount of stimulus that's going to be needed to get through the COVID crisis. And despite all the short-term issues with what's on the presidency's problem, it's going to get resolved by no later than the 12th of December, and we will have a president sworn in on the 20th of January next year. So if we look short term, look, FX will probably be volatile, but longer term, the stimulus is there, it's probably going to come, it will probably pass the Senate, but we may not get the kind of regulation that we were expecting from a full Biden blue wave presidency. And maybe that does explain the sweet spot, and that therefore could be a way of looking at this longer term.